Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and good morning, guys. Let's see what we have today. Let's mark out the new levels that we have, like Monday range and the new averages for the day. Because beside that, we actually have what we need. To the upside, we will go step by step once the moment comes. For now, the 4-day OB is below us, but statistically a low probability to be hit. As showed in yesterday's video about the 6-month candles, we actually just had one time where a 6-month candle took out the high and low of the previous one. So it doesn't mean that it can't happen, but it has low probability, simply as that. Means I don't expect it until this actually proves me wrong, because over time, that would be the more often right decision. That's similar to other strategies where something has low probability and needs first to be proven wrong. For example, market structure. For now, the daily trend is down and the 4-hourly as well. So that means a high probability is that price moves lower unless it breaks structure to the upside. Similar it is in Elliott wave, where you have counts and invalidations where something has a high probability and then invalidates it. So means it can happen, just has lower probability. Interesting is when these things come together. Like, for example, a lot of people aiming for lower on some counts, but at the same time, we have this event here where the high probability is not to go below this low. So here a few things are coming together, and we just need to observe and trade based on our plan. Whether you stick to the plan for lower and manage your risk, or you stick to the plan for higher and manage your risk. So we will observe that and see what result we get out of this. Now let's have a look at a few charts and then mark out the local level. First, I want to look at the weekly chart and the weekly EMA. That's where a lot of people are posting that stuff and talking about bear market confirmation. Now here, I marked out all periods where price closed 2 red weekly candles below the EMA that supposedly caused the bear market. For me, I found 7 times and now the 8th happening. So out of the 7 times, it had success 4 times. And when I say success, I mean it moved lower and spent a longer time below it before finding the bottom. But here I would actually remove the first one. Yes, we saw a move lower after the closes below, but it formed the low within 1 month after that. So is it really a bearish sign? Everyone needs to decide that for themselves. Then we have the cases where it was bearish and price spent always over 100 days and more below the EMA and moved lower before forming the bottom. And then we have the cases where it was actually the bottom after the closes below. Anyway, we keep that as it is and actually see what the win rate of that setup is. Well, 4 wins divided by 7 is 57% win rate. So not really a high win rate, I would say, for something that supposedly starts every bear market. Yes, sure, if you only look at the bear market, you ignore all the other closes below, but that's not how it should work. So I just wanted to show all the cases and, well, it has a 43% chance to actually be the bottom. Yes, slightly favors the bearish side, but still both are near 50-50, while the first one made the bottom after 1 month and the others were actual bottoms. So not really something I would bet my money on unless some other confirmation comes in. And well, based on my other stats, I didn't have that. So for now, only the move below this average price doesn't confirm anything for me. Maybe others see it differently, and that's fine. But I would not bet my money on an average close below. As said, not if other things are not aligning. Anyway, I'm not here to say what someone should do, but I just show the small data points and show you that not everything people think is a 100% confirmation is in reality a high win rate strategy. In this case, 57%. Now let's have a look at the next chart, the death crosses that are really bearish. So let's see what win rate they have. Here we have 12 cases. And yes, again, we can see there are cases where it happened on the top. That's a fact. But if we look at all of them, we can see 4 times this cross led to lower prices with basically no retrace. 8 times we actually had a low after the cross that led to a bounce. And 3 out of those 8 times, it was a lower high and price moved lower after that. and the rest were actually the lows before a bigger move up. So again, you can see that more often, price actually finds a bottom on these crosses, or at least makes a move up for a lower high, while more often it leads to bigger moves up. Anyway, still there is a chance that it plays out with the low probability event. That's always possible. But I just wanted to show what this bearish cross actually looks like when we take all of them. And well, again, nothing I would bet my money on by only relying on that alone. While it actually has a higher rate to find a bottom after the cross, and only in rare cases aligns with the top, most likely when other things align, which for me is not given for now, but that's simply my problem. Everyone can handle this information how they want, of course. I just like to go with the high probability until it proves me wrong. So that's basically it with the crosses and moves below the weekly EMA. For me, if I take all the cases, it actually does not have a good win rate, and I would say it should not be used by its own, but as confluence, whatever that is for yourself, as we all have different confluences. For me, mine are not aligning for now, and I need to see a rise first and judge from there. Now let's have a look at Ethereum, and then the local levels on Bitcoin. Here we see price hitting the previous SR level after it made a new all-time high. Well, it was not much compared to the last bull run, so can I really call it a new all-time high? Technically, yes, but more a shallow one. Anyway, for now we see a weekly correction down to the next support level. This level aligns with a point of control, so not much magic to here, simply hitting an SR level. And on SR levels, I look for a bounce at least to the next resistance level above, and best case, a reclaim and a new high. And in the bearish case, losing this level, which for now is support until proven otherwise. So not much change on ETH, looking for a bounce from this area. Now let's see what we have locally on Bitcoin. First of all, we have here our daily cycle indicator. So this triggers buy signals whenever the time period reaches the price. For now, we can see it print buy signals basically all the way down. Happened in the past. Sometimes it has steps down, and sometimes it's the bottom. And well, in the bear markets, it's more a short-term bottom, but still giving nice bounces. Anyway, for now, we only had one bounce attempt, and that was on the first one. All others were simply lower highs, and it kept moving down and exhausting, and well, it triggered more buys. So the target is usually the upper part of it. For now, it's sitting at 124K. This can come lower, but for now it's at that high, so I keep observing that. Another thing is that it was also hit on the 3-day chart, which is even more rare, as you can see. Usually happens near bottoms. Yes, in the bear market, it had a few lower moves down, but overall, the lower part of the bear market triggered a buy, which, if you look at what happened next, is not the worst result. So for now, we've seen a trigger here on this exhaustion move, and I'm looking for the reaction. Now let's switch to today's levels. So for today, we can see, first of all, Tuesday is the most bearish day with 57% closing negative, with an average move of -2%. And the days where it closed positive 43% of the time, we also see a similar move up with a 1.96% average. If we look where the levels are positioned, we can see the average loss is inside the Monday range, and the average gain is basically inside our resistance level. So closing outside the Monday range and above would not be bearish until proven otherwise. Means for now, based on the average, we can see price could form a higher low, mainly the average loss level aligning with the weekly open level. And the 1-hour structure still intact means it is possible to make another higher low here and simply take out the higher level. And if that holds, then I would look to the next level, which is the 4-hour structure swing high. We have here an empty space to the highs. So while price is hitting some resistance here, once it reclaims it, I would say they aim for these highs. We can see it on the ADOS chart very clean. We have here steps down building up, so they are targets as well. But for that to happen, price would need to break the Monday range and start to reject from there. Then yes, these levels become targets together with our other levels as confluence CAFAT, where we have an order block, and lower, we have the SFP level of this low. But if price manages to hold the higher low and start to come up higher, you can see there is not much above here until the next structure swing highs. So it works similar as on the way down, where we had these levels. And once price started to close candles below these levels, it aimed for the next one lower. Here, we would have the same situation, just with higher, which means if they want price to reject, they want it not to go above this SR level. Once it's above, then it can act as support and basically aim for higher. Until then, yes, the 4-hour structure remains down, and this would be the level to reject. So SFP of the local high, and then start to lose this level, and as confirmation, losing Monday low, where one can aim for the next level. And that's basically it. So to summarize, on higher time frame, I'm looking here for a reaction, which we already have. But to confirm a move, we need to see a bigger move outside this area. For now, Bitcoin is hitting the lunar cycle timing, and the next will be the monthly on the 1st December. Now here locally, price is hitting it as price moves up, usually not the best signal for continuation up. But here we have some higher time frame cycles coming together. So either we get a short-term rejection and price is holding, and all this is just a bigger time area, or it can reject like it did exactly on the last one. And that only based on the lunar cycle, of course. I know this can extend a bit if there are some other time frames coming together. And here we are, awaiting a weekly cycle low. So I keep observing it. A structure break would already be a good sign for higher prices and a confirmation for the low being in. Now from the last video, price is already 8% up. So if you have taken it, it's a nice day trade move, as the structure kept going up and there was no reason to exit or take profit until the resistance level got hit. That's one way to manage a trade. When I see a level get hit, I can hold the position as long as price makes higher highs and higher lows, and/or touches the resistance level, basically trailing it manual up. And then when I see weakness, either take profit more or close the position. Anyway, for now, we have levels lower, but hitting them would be a low probability event, as shown before on the 6-month chart. Means it's not impossible, but everyone needs to go with their stats. And to be fair, this year we already had a few low probability events, so I would not be surprised, but I can't give it a high probability for now. If price makes a new low, then this would be a potential opportunity, an SFP or deviation type of trade. But before that, we would have this local AUB with the weekend lows. So that's also a level to watch for a reaction if price comes down there. And the very close one is the weekly open and average loss level. It's basically an area here. If that level gets lost, then I would look for Monday low and reaction there. And no, it's not needed to trade them all. I just go through the process of what to look for. And to the upside, we have this same resistance level where a SFP or deviation of Monday high into resistance is a possible scenario for a rejection. Once it reclaims that level, I would aim for the 4-hour swing high. And that basically it, just quick to the rabbit box trades. Here on other time frames, it filled a lot of positions already with the target higher. So as said, I hold this until the target is hit, no matter how long it takes. Based on some stats, I think it will happen from the next rise, but we shall see. On the latest one on the 4-hour, the target is basically the last high. It can still fill lower positions, of course. But for now, one was filled, and I aim for that high. And the leverage position is still open, and I'm aiming for higher with that, and will update if something has changed with it. So that's basically it. Wish you a good day, stay safe, and see you in the next one.